Good afternoon, everyone, and welcome to Stock Market Today for Monday, November 24th. It's Alexis Garcia here, and the major indexes kicked off the shortened Thanksgiving trading week with a big rally today. Tech stocks driving the gains on Wall Street. And here with me to help break down everything you need to know about today's trading action is IBD Market Research Director Justin Nielsen. So let's get Justin on here. No turkey today, Justin. Just a whole lot of green,
Yeah.
I guess.
We got our
But
vegetables? I don't know.
yeah, I don't know. We'll, we'll make that work. But what do you have on tap for us today?
Man, there's so much that's moving, but yeah, the big question is going to be, is it enough? So we'll kind of give two sides to every story here, but we'll start out with Apple, also talk a little bit about Celestica, up a huge amount today, and then also Globus Medical, because the medical stocks still looking very strong.
All right, well, we'll get to those stocks, but first, let's just check in on the major indexes. The S&P 500 finishing the day up 1.6%, the Dow up 0.5%, the Nasdaq up 2.7%, and small caps finishing the day up 1.9%. So, Justin, let me go ahead and get the charts going here. But talk to me about this market because we had the indexes fall below the 50-day line. We had some big, ugly downside reversals last week, but today it looks like it's trying to get back above these key levels here.
Yeah, it is. It is trying to get back above both the 50-day and 21-day moving average lines are kind of base case. Yeah, at least got to be above there, and a lot of times in order for me to be even involved. But that Thursday, it was such a big, wide day, and again, it was only matched, strangely enough, by the October 10th day. Remember, that was when President Xi and President Trump, China, U.S. going at it a little bit, and we actually, that was a really big spread. And actually, the spread that we had last Thursday was even larger. The high got above that high, and the low got below that low of October 10th. And that seems like until we get above Thursday's high, it's going to be very hard for me to get too excited by this market, especially right now. We're right at that critical level of the 50 and the 21-day moving average line. I mean, if this got turned away, if for the rest of the week we kind of faded, that would be a really bad look. So, and you could easily see that happening. On the other case, on the other hand, if this did start continuing and making further progress, once it gets above that Thursday high, it's going to be like, okay, well, it's recovered from that ugliness. And until then, it's a little bit hard for me to go either way. I just don't feel like I have an edge right here. So I'm remaining light myself, just because I don't want to stick my neck out on. And I should also say, for swing trades, a lot of these swing trades, it's very hard to manage risk in a lot of these cases. We saw a great upside reversal on a lot of stocks, the indexes as well on Friday, but they were so low in that Thursday range. Did you really want to stick your neck out? Because it just seemed like, especially in this market, we've had a lot of those upside reversals. They roll over and do just enough to shake you out and make a new low before you get another upside reversal. So I've been playing that game here for the last month and a half, it feels like, and it has not been working well for me. Buying at the highs and selling at the lows. Who knew that doesn't work in terms of getting your portfolio to go higher? Right now, again, I just need more evidence, and one of the big things I'm looking at is that Thursday high.
All right. Well, no, I mean, there's just been a lot of chop. It's been really difficult out there, Justin. I'm going to switch over to the NASDAQ because kind of the same story here, approaching these conjoined 50 and 21-day lines. But talk to me about what you've been seeing in tech. And again, we're be looking at that Thursday high, as you mentioned, as maybe the next key level to get across.
Yeah, definitely. I mean, tech has, been coming on a little bit stronger. A lot of money moving back to the AI plays. But again, there was a lot of damage done too. So it's again one of those situations. You had some of the high flyers already in just this mild correction. They were already down 30, 40, 50% or more, like your Oklos and things like that. So it's really tough when you've got that much damage to get too excited about 10% moves when it's just, again, still only scratching the surface of the damage that was done. So here again, if we do cross some of these downtrends, which the Thursday high is kind of setting up a little area here, where if you look at some of these, then you're saying, okay, well, gosh, if we just kind of draw a line from the 24,000 level on down, it does seem like that Thursday, you have to cross that line, right? And it coming right up to it, even that is a little nerve wracking, because just like we are at the moving average lines, if we get turned away there, you'll kind of kick yourself a little bit. Say, oh well, we came up to the line and got turned away. That's a sign of resistance. Why did I buy early? On the other hand, if it goes through there, then it might be a little bit tough, because things might be a little bit more extended than you want to buy. And again, it might be a little bit tougher to manage your risk in that way. So yeah, it feels a little bit like in no man's land. So it's not easy right now.
We'll be keeping an eye on that Thursday high, Justin. Let's just quickly check in on the Dow Jones. Again, this one a gainer today, still below the 50-day line, but same with small caps trying to claw back some of these losses and get above those key moving averages.
Now, I will say for the Russell 2000, to its credit, on Friday, whereas most things were closing in the bottom of their ranges from Thursday, this one did close in the top of Thursday's range. So that was a plus. It was up considerably. I mean, this was up much more than the other indexes, being up 2.8%, but it was still an inside day, up that much and still an inside day. Now, today, it looks like it did cross above the Thursday high, but there's also been more damage done here. So it's still, despite being up above that Thursday high, this is still below its 50-day moving average line, and that's an issue. It's hard for me to get excited about buying stuff that's below the 50-day moving average line. If you can't be above that medium-term trend, how strong are you? But certainly the last couple days, you have seen a little bit of a boost in the relative strength. It did lag the Nasdaq Composite today, with just a 1.8% gain. I say just 1.8, like that's nothing.
Yes.
Uh, but but yeah, it is in a better position in relation to its Thursday high, but in a worse position in relation to its 50-day moving average line.
All right, well, let's take a look at market breadth, Justin, because that was also down heading into the end of the week, also trying to recover here. So what are you seeing in terms of market participation?
Well, here again, it was kind of interesting how RSP looked strong in terms of where it closed in its Thursday's range on Friday, and again looking good today. But gosh, when you look at 0.4% versus the S&P 500 up 1.5%, I mean that's not great, right? So that means that the average stock was not doing nearly as much as the mega cap stock. So I mean, if you look at FNGS, for instance, which is kind of your $1 trillion club of stocks, this was up 3%. So this was where kind of the money is, but still not above Thursday's high, still not really decisively above the 50-day or the 21-day moving average line. So yes, mega caps, and we're going to talk about Apple in a little bit, but mega caps definitely seem like it was getting a lot of um, the money, and advancers were still above decliners. I'm showing like 1,800 advancers versus 1,100 decliners on the New York Stock Exchange, and for the Nasdaq exchange, I was showing about a 2-to-1 ratio in favor of advancers over decliners, with about 3,100 advancers and 1,500 decliners, according to Thinkorswim. So, it's not like these were really poor, but they just did not. The average stock did not have quite the move. Now, QQEW was much stronger than RSP, the equal weighted S&P 500. This was up 1.2%, but still, in relation to what the Qs did, certainly lagging quite a bit, significantly.
And then let's just check in on the 10-year Treasury yield, Justin, before we move on, because this had been ticking up and trying look like it was holding at that 4.1 level, but falling over the last few days, down again 0.6% today.
Yeah, so I mean, a lot of eyes are on the Fed, December 10th coming up. What's going to happen? We've seen a lot of volatility in what the expectations are for that meeting, whether or not there's going to be a rate cut, whether or not it's going to hold pat. And remember, our last meeting, there were two dissents and they were opposite ways. One was like, hey, we shouldn't have cut, and one was saying we should have cut more. So it's, I think, a lot of uncertainty, right now. I think a lot of investors are trying to get their footing, and that's increased the volatility. Let's just take a look at the VIX real quick. This is known as the fear index. This has come down quite a bit from Thursday, but it's still at an elevated level. From where we've been lately, being above 20. So I'd kind of like to see this get a little bit less. And more importantly, it's this intraday kind of volatility, the intra-week volatility, where you start one way and then you are completely the other direction later on in the week. So we've been talking about how, even intraday, a lot of times you might start strong and finish weak. It's nice that in both of these days we finished strong, both today and on Friday. But we'll see if that can continue. And again, those Thursday highs, can we get back above those?
All right. Well, let's take a look at some sector ETFs. You talked about FNGS, but how about FFTY? That's the IBD 50 ETF. This one up over 4.5% today, Justin, heading toward that 35 level. But again, still a ways to go before hitting this declining 21-day line and the 50-day line.
Yeah, and exactly, and you got to remember that FFTY, it's rebalanced frequently. So there are a whole host of new names each week. Sometimes they stay pat, but when there's a lot of sector rotation, this does move into other areas very quickly. So it can be, this can be very rough in terms of recovery. Sometimes it takes it a while to recovery because you need a trend of stocks in there that stay in there and continue going higher. When it's volatile, the names can be volatile in terms of whether they're staying in there or not, a very high turnover ratio. And so just looking at the chart itself, it's got work to do, just like everything else right now.
Mhm.
Also, probably worth looking at IBIT, because a lot of people have been pointing to IBIT or Bitcoin, I should say, in cryptocurrency as having a liquidity issue, and that's what was kind of causing some of the market gyrations. And look, this was up considerably, up 5.5% today. But again, look at the position,
I mean,
well
still so
below.
well below the 250. Is
Well, below everything, I
below
mean, take your
everything.
pick. Any level of support that you would have wanted this to have, it just like blew through it. And again, let's go to the weekly real quick. Just as a reminder for folks, this is still 30% off its high. So up 5.5% today, and still 30% off its high. So it's got a lot of work to do. As you mentioned, 200-day, 50-day, take your pick. There's a lot of hurdles this has to cross.
Let's take a look at GLD, maybe less hurdles there. This one, again, had such a great run up until hitting this 403 high back here on October 20th. It pulled back, but it seems like it's trying to find its footing, up about 1.6% today, Justin, and really moving above this 21-day line.
Yeah. So as a reminder for folks, that know kind of some of our rules for the IBD methodology and have heard of things like the climax top, this was not a climax top. It was definitely going at an angle that we're not used to for GLD, but usually we don't call a climax top that soon after a base. It's after it's been an extended run that we start saying, okay, this might be ripe for a climax top. It certainly crossed levels. It was going higher than, I mean, at a steeper angle, but too soon to be a climax top. And so, look, that just means, it did need to take a break, which it has. I really like how tight it got right at its
Mhm.
21-day moving average line. So there's a lot of indications here that gold is, potentially not done here. And a way to play that is with GDX. If you want to go with the gold miners, those do tend to be a little bit more have a little bit more oomph over gold. You can see even today a 5.8% move for the gold miners. And yeah, this is something where despite that big move that it had earlier, and look, it came off pretty considerably, but I think this is still potentially setting up. So something to be keeping an eye on.
All right, how about one more look at XLP? That's the consumer staples spider ETF. This one down 1.2% today, Justin. And again, trying to build a base here, but well below the 250-day lines.
Well, and that's one of those things where you have to be very careful because staples are, I mean, they can really suck you in, right? Because this is where a lot of the institutions go to hide when things start getting dicey and you start seeing the names really do well. But, this got turned away at its 50-day moving average line. As tech starts sucking up more money, then where do people go? The places where they hid, it immediately comes out of there. And I'm just going to point out one example here is Coca-Cola, KO. This looked so strong on Friday. And if you were like, well, gosh, Coke is it, here we go. It had a very volatile day. And look, it was down at one point, it was down like 1.5%, had lost all of the gains from Friday. It closed off its lows and in the upper part of the range, but still not the kind of volatility that you usually expect from one of the staples like Coca-Cola.
All right, well, let's take a look at some of the individual stocks, starting with Apple. That's ticker AAPL. This one, 1.6% gain today, Justin, and looks like it's getting above some of these recent highs here.
Yeah, so we looked at FNGS, which Apple is a member of, and look, that's just getting above, getting back to its 50-day moving average line. But you have Apple and Alphabet as two of the strongest in this current market. I mean, Alphabet is out of there; it's gone. It's sayonara.
Way extended.
But Apple was kind of. Look, it had tightened up recently. This is actually something that can still be bought at this level. You had a nice uptick in volume both on Friday and today. So that was kind of nice. This is above its Thursday high. So it's checking off that box. It's already above its 50-day moving average line. Didn't even cross below that since August. And it got support at the 21-day moving average line. So in a very different position from some of the other FNGS members. I'm looking at you, Meta. So Meta was up a lot today, but is in such a weaker position,
Mhm.
having plummeted through its 200-day moving average line. You've got that 50-day moving average line looking like it's going to cross below that 200-day moving average line, anytime now. So yeah, this was up, 3%, but it's in such a horrible position. I'd much rather go for an Apple that's in a better position, or retroactively by Google if I could.
So you're looking at this Thursday high then as a potential entry
Yeah,
point?
and
Okay.
and we crossed above it today.
All right. Let's go ahead and look at Celestica then, Justin. That's ticker CLS. This one up over 15% today. And again, just powerfully rebounding off of this 50-day line. So thoughts here.
Yeah, the thought is, what do you do with it? It's up 15%. So if if you bought it today, you're still not above Thursday's high. So you kind of haven't, even gotten above there. You are above your 50 and your 21-day moving average line, but that Thursday high is still looming for this one. You're up 15%. So let's say you go to put in a stop. Where do you put that in? I mean, you could easily see this coming all the way back down to the 50-day moving average line. And so you set a stop there. that that's a lot, or that's a lot to lose on a potential trade. So this is the problem with a lot of stocks out there right now, especially the heat that did so well since April through October. Now these have come off quite a bit, and some of these, they're more volatile. The ATR, the average true range, is much higher for these, and it's really tough to kind of figure out how do you get into something like this and manage your risk. And for me, this was just one that I had to skip because I'm not going to be buying it as it gets above the 21-day moving average line and look at a 10% or more loss. Even if you use the 50-day moving average line as a stop loss, you could easily say, well, gosh, you know, uh, there's the low of Friday. Why not use that? Well, now there's another 5%. So exactly how much would you let this come in? And if you use something that was too tight, because the stock is so volatile, you could easily see it knocking out those stops. So it's always a balancing act. If you make your stop too tight, you're more likely to get shaken out. you make it too loose, and if it doesn't work, you're taking on a bigger risk. You take a bigger hit when you're wrong, and that's more difficult to recover from. So if you did want to play something like this that's more volatile, one way to do it is with smaller position sizes. So you're
Mhm.
managing your risk to your portfolio, even though you might take a big hit on the trade percentage. If you're doing a smaller position size, that's going to limit the risk to your portfolio. But the biggest issue, and again, this is why I skipped this one today for myself, is again, how do you manage that risk? How do you
Mhm.
get the asymmetric trade in your favor? Sure, I could see this easily going up another 40 points to the highs that it made at 363 just a few weeks ago, but I could also just as easily see this, coming down below the lows of Friday, and then that makes it a little bit more 50-50 for me. So I want to get something more in my favor on the upside.
Yeah, particularly in this market, Justin. Let's take a look at one more ticker GMed. That's Globus Medical. This one breaking above a 87.16 buy point today, up 2.2%.
Yeah, so the medical again is still very strong. This was breaking out of just a cup with handle, but one of the things that's interesting is we had that big gap up on the earnings move. So how much were we up on that day? Up an incredible amount.
It was up
So
almost 36%.
36%. It didn't give up any. I mean, hardly
Mhm.
any, right? It had that big move, didn't even cross below 80, the low of that gap up day. Um, whatever, people were just very comfortable with it at this higher valuation, and so now it's broken above that downtrend. We don't have to worry about Thursday highs here that got clobbered on Friday, and it's breaking out of a cup with handle. So tight action, very interesting looking to me. Another one I'm going to put in this same kind of caliber is Illumina, ILMN. So we'll consider this a bonus stock. This one also ILMN, yeah. This one
Got it.
also had a big gap up on its earnings, really tight action, and looking strong, like it's ready to come out of that tight action recently. Both Illumina and GMed, you can see kind of a volume change. They've had some nice volume coming in. I would say GMed is a little bit better in that regard, both on the volume side and on the fundamental side. It's just got some stronger numbers in the last few quarters in terms of both the top line and bottom line growth. So this is my favorite one, but yeah, they both looked good. And I should say, GMed also landed on leaderboard today. Apple landed on Swing Trader. So these are some of the stocks that we're watching.
All right, Justin. Well, thank you so much for your insights today. And that wraps it up for this edition of Stock Market Today. If you want more market analysis, be sure to tune in tomorrow morning, starting with IBD Live. You could head on over to investors.com/IBD Live for all the details there. And thank you so much for watching. We'll see you right back here tomorrow after the close.